Corporate Financing Week September 2017 United States finance with US IPO momentum expecting to continue accelerating and with the country's pharmaceuticals sector continuing to be forecasted as the most attractive globally, we expect the healthcare sector to continue competing for the leading share of first-time domestic share sales by deal value going forward over the coming quarters. More broadly, with U.S. markets sat near all-time highs and with volatility in the equity capital market ECM arena at a historic low, there is still plenty of upside potential for the current bull IPO run, especially with a stable macroeconomic backdrop in both the U.S. and globally fueling the market. In particular, we point to the fact that U.S. floats have risen by an average of 15% in the YTD aftermarket and outpace the performance of the benchmark S&P 500 index, up by 12.01% in the YTD and by 19.60% YOY according to Bloomberg data correct to September 18 in the process, as a strong indicator of strengthening investor sentiment in first-time floats and equities. A steady flow of deals. U.S. IPO filings by monthly deal volume source www.renaissancecapital.com. Floats continuing to enjoy success. There may have been a lull of activity across the summer months of July and August, which is not irregular during holiday season, but this has not significantly dented the overall YOY increase in U.S. IPO activity. In fact, Renaissance Capital data shows that listing activity correct to September 18 is still way ahead of where it stood a year previously. Deal volume is up 47.6% YOY with 93 deals having been completed. Deal proceeds have more than doubled in the YTD period, 119.3% to $22.2 billion United States dollars, and filing activity is up 41.8% to 129 deals. Within this wave of interest in floats, we highlight that biotech IPOs have helped make healthcare the YTD period's most active industry sector, a position which we expect the sector to be in come the year-end, with the only real challenge to this lofty status from the high-technology industry, which has also contributed a high volume of deals in 2017 to date. See US IPO momentum to continue accelerating in H217, July 12. While there is plenty of cause for optimism in the near term, it is important to remind ourselves that there may be trouble just across the horizon, a view that we have been highlighting for some time now, and that U.S. boardrooms are likely to continue bringing the timeline of proposed deals forward as a result of this to increase their chances of success in doing so, elevating activity levels in the process. See US IPO bull run warning shots fired, June 7. Indeed, we caution that, from a medium-term perspective, extreme valuations and bullish sentiment leave U.S. stocks open to extreme downside risks and that the market could lose its bullish momentum as a result. Healthcare top spot in the rankings. A look at the performance of the sector in the U.S. IPO market in Q217 shows that the volume of healthcare deals numbered 14, worth a combined $1 billion United States dollars, the highest number of any sector, equivalent to a 27% market share. Despite broad contribution by floats from a wide range of industries, the healthcare sector, when combined with the tech sector, contributed over half of all U.S. floats during the second quarter by deal volume. The link between the two sectors is not just arbitrary. However, the biotech subsector has contributed a strong flow of deals over recent years, and we expect that momentum to continue strengthening going forward too. In fact, data from Renaissance Capital Research shows that of the 14 floats versus the tech sector's contribution of 12, worth $1.6 billion United States dollars, a two-year high for the sector, and representing a 23% market share completed by the firms from the healthcare sector in Q217, as many as 13 were biotechs, with deals which catalyzed heavy insider buying. We highlight that another biotech firm is on the cusp of going public too. Indeed, Krystal Biotech, a preclinical gene therapy biotech focused on dermatological diseases, is hoping to tap ECM investors on the Nasdaq bourse for around $30 United States dollars Minnesota during the week ending September 22 by offering 3 Minnesota shares at a price range of $9 United States dollars to $11 United States dollars. At the midpoint of the indicative price range, Krystal Biotech would command a market value of $88 United States dollars Minnesota. We highlight that there are plenty more companies waiting in line to go public in the US, and as was the case across the first 8 months of the year, those deals are set to come from a broad range of industry sectors, not just healthcare and tech. As of August 31, Renaissance Capital data shows that there were 64 firms in the pipeline, 36 of which have submitted a new or updated filing since June 1. performing well in the aftermarket on average. Healthcare sector floats have returned an average of 10% in the post-depot aftermarket so far this year. While below the 2017 to-date average, we note that this performance is exactly in line with the long-term average of U.S. floats across sectors. The industry has not been without its fair share of standout performers, however. Indeed, the sector did contribute 4 of the 10 best-performing floats in Q217. Clinical stage biopharma firm Biohaven Pharmaceuticals enjoyed a 47.1% return in the aftermarket as of the end of the second quarter, having recorded a modest 2.9% first-day pop following its $168 United States Minnesota May 3 listing. Innovative cancer therapy developer Athenex $66 United States Minnesota float on June 13 saw it debut with a 14.2% increase before seeing its stock price climb by 45.5% by the quarter-end. Clinical stage biopharma firm UroGen Pharma finished the second quarter with its stock up by 38.9%, an improvement on its 7.5% debut which came with its $58 United States Minnesota May 3 IPO. And biotech company Avenue Therapeutics enjoyed the market's second-largest first-day return, 37.5%, following its $33 United States Minnesota June 26 listing, before seeing its share price stabilize over the final few days of June to finish the period up by 32.5%. With sectoral returns positive in the aftermarket, and IPOs in general posting returns, it is unsurprising that further firms from the sector want to join the wave of deals. U.S. healthcare coming out of uncertainty. BMI highlighted that, despite all the positivity, there has been plenty of reason to be cautious about the future of healthcare sector floats. After all, 2017 has certainly not been without complication for the U.S. healthcare sector. Indeed, efforts by the Trump administration to repeal and replace the Affordable Care Act (ACA) created a growing sense of uncertainty in the U.S. healthcare market towards potential changes to its operating environment. Back in March 2017, the U.S. House Republicans released the much-anticipated replacement for the Affordable Care Act (ACA), Obamacare, the American Health Care Act of 2017 AHCA. In fundamental terms, the AHCA sought to reduce the federal government's involvement in the provision of medical services while encouraging greater personal responsibility. It was designed to change how health care is funded and potentially eliminate the mandate requiring most people to have health insurance, which was a key pillar of Obamacare. Newly proposed policies on topics such as biosimilars, pay-to-delay generic drugs, and universal health care will have had a major effect on the future of the U.S. drug industry. But it was not meant to be, with President Trump's proposed healthcare reform collapsing in the Senate in July and the ACA no longer being repealed. While this will likely give more certainty over healthcare legislations in the near term, we highlight that it is still a possibility that President Trump could withhold cost-sharing subsidies with states that he used to help keep healthcare costs down. This could be a strategy in the upcoming debt ceiling negotiations. The debt ceiling will need to be raised this month, or in October. Once this cloud has passed, we expect the slight backlog of healthcare deals which have been taking the watch-and-see approach on the sidelines to put their deals into motion once more and add to a strengthening wave of floats from the sector. U.S. pharma market in strong health. Subtracting the political maneuvering around healthcare policy from the equation, we highlight that the very size and steady growth of the U.S. healthcare industry is always likely to provide ECM issuers looking for the funds to support growth and attract investors looking for a strong return. Indeed, BMI's pharmaceuticals team argues that the U.S. pharmaceutical market presents strong commercial opportunities across multiple subsectors, therapy areas, and product categories. Total pharmaceutical sales in 2016 reached $371 billion United States dollars, which was more than 3 times the size of the next largest market, Japan, $95 billion United States dollars. Furthermore, the U.S. boasts the largest individual markets across the 3 core subsectors: patented, generic, and over-the-counter medicines. More broadly, healthcare spending in the U.S. reached $3,278 billion United States dollars in 2016 and will likely to continue to account for a disproportionately large percentage of its GDP over the coming years, and spending growth is expected to slightly outpace economic expansion over the medium term. Efforts from payers in both the public and private sectors to constrain expenditure will be offset by the fundamentals of a rising burden of disease, near unrestricted healthcare access, unparalleled spending power, limited market barriers, and adaptive providers of medical goods and services. We note that, with a score of 87.6 out of 100, the U.S. pharmaceutical market ranks first both regionally and globally within BMI's Innovative Pharmaceutical Risk-Reward Index, a reflection of its unquestionable attractiveness and limited risks relative to other markets. Biotechs in the engine room. The biotech subsector has proven itself to be a red-hot favorite among investors over recent years. This preference helped the broader healthcare industry top the U.S. IPO sectoral rankings for both the 2015 and 2016 full-year rankings, and has done the same in the 2017 YTD period too. Going forward over the coming quarters, we expect the high-growth sector to remain in the engine room for floats too. This view is not only supported by the success of recent deals from the subsector and their outperformance in the U.S. aftermarket, but also by biotech stocks more broadly. We highlight that the Nasdaq Biotech Index, which tends to be closely aligned with S&P 500 Healthcare Index, has been performing strongly of late and, as of the time of writing, is up by 25.24% since the turn of the year and by 14.35% since a year previously. In comparison, the S&P 500 Healthcare Index is up by a more modest 14.7% in the YTD period.